A week of turmoil for the banking sector. The collapse of 3 mid-sized US banks has sparked fears of a global financial crisis. The US central bank has reported a surge in emergency lending as a result. The figures serve as a first glimpse at the scale of the Fed's assistance after the collapses. $160 billion were lent to banks in the past week after the launch of an emergency program. That figure climbs to a staggering $302 billion when including loans to the FDIC, a public agency that insures deposits. Treasury Secretary Janet Yellen has sought to reassure depositors amid fears that the collapses could spread to the rest of the world.
There was a serious risk of contagion that could have brought down and triggered runs on many banks. Our judgment is that the banking system overall is safe and sound.
Over the past year, central banks around the globe have been sharply raising borrowing costs to try to curb inflation. That contributed to the collapse of the US banks by hurting the values of the large bonds portfolios they bought back when rates were lower. Central banks are now stepping in to help. The Swiss National Bank has lent up to 51 billion euros to lending giant Credit Suisse after it was left particularly vulnerable. But experts agree that its troubles were distinct from events in the US.
Credit Suisse have a series of, mismanagement and legal issues, and also, they kind of have been trying to survive.
As central banks rush to contain the issues locally, financial markets have remained jumpy, and a look at the plummeting European banks index signals that concerns remain.